Hi, this is Dave. Welcome to the weekly market recap, closing out the week for Friday, February the 21st, 2014. I'm recording this video on Saturday, February the 22nd. So let's just jump into this. We're looking at the Dow Futures on the daily chart. And you can see that I'm just going to start deleting a couple of things off of the charts here. You can see that the market has pulled into an area of resistance here. Excuse me. And this resistance lines up with a 618 move from this high to this low, and this is a 618 retracement of this move. And you can see it also coincides with a trend line right where we've been finding resistance on the week. So if you look at where the price action closed, we pulled into this trend line, then we pulled back into, so we pulled into this trend line resistance, and then we pulled back into the 21 exponential moving average support, and then we pulled right back in and we closed right at that resistance level. So we're just slightly, let's see, 16,093. We're slightly above this 618 level, but we closed right at that trend line. So this is kind of closed at a line in the sand here. And we're overbought in our stochastics. We've got zero line resistance on the MACD. So the question really is, okay, are we going to push off from here, come up and retest these highs in the Dow, or is this going to be resistance because we didn't clear that high? We didn't clear this high that was that happened earlier in the week on, I guess, Wednesday. Monday, Tuesday, Wednesday, we couldn't get above that high. So the question is, are we going to roll over? So in terms of where we are in the market right now, the decision points that I'm looking at are, if we break above this high, then I'm looking for a retest of these highs. Okay, so I'm going to be watching for that. And if we come back down, then and we fail this resistance level here, then I'm going to be looking for a move into this zone right around there. So now that we've established that these are key levels. Let me clear some of these off. Let me delete some of these off the chart. We know that we came into a 618 down in here. I'm going to clear that off the chart just so that the chart's a little bit clearer. So at this point in time, let's look at where we are from a fib perspective from these lows to these highs. And the key zone of the 50 to 618 point. Sorry, the key levels on the fibs from this recent high, from this low to this high. Okay, if we look at where retracement might come in, I've got some key levels right in here, and they line up perfectly with the 50 and the 61.8% retracement. So one of the major things I'm going to be looking for going forward is going to be a push down into this level, see if we're going to hold this, come back up and break this trend line. So this level I'm going to be looking at is key between 15,732 and 15, let's call it 15,600 to 15,000, 15,600 to 15,700. I'm going to be looking at a pull back into this area, a key level to see if it's going to hold, and then we're going to push back up. As long as we hold these lows, I think the long side could still potentially be in play as long as we hold these lows. Okay, these lows came in around 15,300. So this is really the decision point I'm going to be looking at. I'm going to be looking at if we're going to break above these highs, that is a decision point around 16,200. If we break above those highs, then I'm going to be looking for a push into the highs. And if we pull back into this zone and we hold, I'm going to be looking at that area. So I think these are the two key decision points, along above this level and then looking at a pullback into this level. And if we hold, then along back up above this trend line. So I hope that makes sense. Those are the key decision points I'm going to be looking at. I'm favoring this scenario here for the simple fact that we're overbought, and I would like to see the market reset itself before it potentially moves higher. So I hope that makes sense. Let me jump over to the sister indices and see what they're doing. Here's the S&P futures. The S&P futures challenged their highs this week. They're, statistically overbought from a stochastic perspective. They're just getting above their MACD zero line. and they're just testing the 5 ATR 20. So we haven't gotten above those highs. If we can get above, let's say 1850, then I'd be looking for a move higher. But I think a potential, short-term pullback makes sense. Now that pullback may have already happened on Thursday when we found resistance and then we pulled into the 21 exponential moving average and then we came right off of that. So I'm cognizant of the fact that we may have already gotten a pullback, but we'll just have to wait and see going forward what happens there. Let's take a look at the Nasdaq. Nasdaq's a little stronger. The Nasdaq is at the top of the top of its range here. It broke out above these highs. It came down and it held 3632, which was the retest, of the, I apologize. I'm having a hard time talking today. So essentially here was resistance and we pulled down and we broke above resistance and we just came back down and we retested that. And at this point in time, we're holding. So if we hold this level, 3632, and we push off, then that would bode well for all markets. So I think I'm sort of looking for the Nasdaq. I'm looking to the Nasdaq to provide guidance because it is the strongest market to see if we're going to enter into a new bull run. Now remember, we're coming into a period of seasonal strength. Let me just pull up those charts. We're coming into a potential area of seasonal strength in the in these markets. So let me just look at this. So if we look at the Nasdaq, the Nasdaq, this is where we are right, in this area here. And you can see we're entering into a period of potential seasonal strength from the beginning of March until, well, it looks like the middle of April, okay? And then we have a pull down and then we've got the potential to go higher. So I'm looking at this area looking to see if we're going to get some sort of a quick pullback or if we're going to get a breakout, just based on the seasonality and just based on, the market action that we've been dealing with the last, couple of weeks. So the markets haven't been all that interesting. Let me go back to the traditional charts. The markets haven't been all that interesting. They're really just going sideways for the last, week or so. If I jump back to the Dow, the last week was really just sort of sideways action, looking to see if we could get through resistance. The S&P, same thing. We're really just going sideways there. Hasn't been all that interesting. The Nasdaq, same thing. Just sideways here. And then if we look at the, let's look at the Russell Futures. So the Russell Futures, same sort of situation. We've just been going sideways for the last couple of days. So the Russell Futures have the potential to come up and retest their highs. So I hope I've made myself clear. I don't want to beat this to death, but basically I'm looking to see if we're going to either break out or have another quick pullback and then a breakout going into the end of the month. I'm going to be watching that really closely. So let's take a look at the transports from a Dow theory perspective. The transports are, in my opinion, more bullish than bearish, especially if they can get above, this little swing point high here. They have the potential to re-challenge their recent highs up around this level here, which would coincide with around 76, let's call it 7,600. I could just drop a level there. Let's do that. Overlay a level, 7,600 roughly, to look to see if we can get a retest of that and then a break of that, and looking to put in potentially a new swing point high at some point, up and around above this high. So I hope that makes sense. Let's take a look at some of the key currencies. Let's look at the dollar index. The breakdance fight continues. We're just holding 80.21. Really not much going on there except that we're statistically overbought right now in the stochastic indicator. So the question is, are we going to hold this level and push into maybe 80.85 again? Okay, so there's not a lot interesting going on there. Let's take a look at the euro. The euro still, not a lot going on there either. It's just sort of sideways, and it's holding, the 8 exponential moving average, and it's statistically overbought, but the MACD looks higher. So these markets don't really look all that interesting. I don't really have a lot on them. Let's look at the USDCAD. The USDCAD came right back up and retested these highs here. So the question is, we've got positive momentum. The question is, we broke this trend line. We didn't come quite down to this major trend line down here, the more major trend line support. So the question is, are we going to break $1.12 and maybe come up and challenge some of these higher levels, potentially even as high as $1.17? So that is, that's really interesting. I mean, you're either going to have a situation where a double top forms here, or you're going to push in and put in a new swing high from a market structure standpoint. And if we put in a new swing high, the question is, how high could we go? So looking at it from that perspective, let's look at a measured move. Potentially, let's look at projecting this swing high from there. That would bring us into about 115. So that looks sort of interesting. We'll look to see if that takes place or not. And let's jump over to a couple of other markets. I'm just going to pause the video for 1 second here. Okay, just pause the video there. Apologize. Okay, so we were talking about the USDCAD and where it could potentially go there. Let's take a look at natural gas. So natural gas, I think we were talking in last week's video about, this was the bar where they were selling it at $5.47, $5.74.3, basically $5.74. If we could get back above there, things would get interesting. And if you notice, we had this, above this is where they were selling it. You can see this is a distribution type of candle. It's not quite a gravestone doji, but it's significant because you have, you had a run up and then it got sold off and then it pulled back. So a run back through that level, you can see we hit it with a wide range bar here, and we pushed through and we just haven't looked back ever since. So that was significant. That's where I thought natural gas would get interesting if we could break above $5.74. You can see what happened when that did actually, take place. The question is now, is it going to hold $5.74? And run potentially higher into, let's say, $7, or is it going to pull back? And as long as it holds $5.74, I think we have the potential to test some of these higher levels. I think we've built a long-term base in natural gas where we had a long-term sell-off, we had a long-term base form, and now we have the potential to go a little bit higher. So as we all know, natural gas is subject to weather and things like that. So I wouldn't be surprised to see it push into $7. I also wouldn't be surprised if we got some warm weather, if we encountered a lot of warm weather or whatnot, or news or other sort of things that would affect natural gas to push it back down, to the $5 level. So I'm just keeping an eye on this. As long as we hold $5.74, I think things could get interesting to the high side. So let's take a look at crude oil. Crude oil has been, I was talking about last week, this situation here where we had the potential to go higher, but I wasn't that confident that we'd really get through this major resistance level of $100 a barrel and then 101.32. And if you look at what happened, I mean, that was a key level. And, I was just wrong. We got through that level. We had this double bottom form here. We did actually push through that level, and we've been holding it for 1, 2, 3, 4 days. And you can see we came back down on Friday. We tested that level and we held. So 101.32, I think, is the key level going forward. Looking to see if we can hold that level and if we can push off and retest some higher levels. I think what I was talking about in last week's video was I wasn't that confident that we could actually get through that level, but if we did, then I'd be looking at 110 to $115 a barrel. If we can hold 101.32. So that's sort of what I'm looking for. That's what I'm looking at as long as we can hold this key level here. So hope that makes sense. And let me just change this. Okay, so we've covered most of the markets. Let's take a look at some of the metals. Let's take a look at oh, that stayed on there. Let me just clear this off. So gold gold pushed higher. We talked about how it already hit these targets. I think gold has the potential to maybe go to 1360 as long as we can hold, if we can hold these levels and push higher. I think 1360 is potentially in play. That's a retest of these highs. But having said that, it's not a very straight line, is it? Having said that, I mean, this isn't all that interesting of a market. I'm watching this trending indicator closely to see if we're going to roll back up to the high side and turn blue. But, having said that, this has just been a sort of lethargic sort of choppy, and then there, you get a thrust in here. You had sort of a thrust in this area, and then it gets choppy, a thrust. So I'm just looking to see if it's going to repeat that action where it's kind of lethargic, choppy, and then we get another thrust higher, or if we're going to pull down into support. I think we are a little bit overbought here, so I wouldn't be surprised to see a bit of a pull down and then a push up. I am more bullish than I am bearish on gold right now, until and if we break this trend line here. So as long as we're trading above that trend line, I'm more bullish than I am bearish on the gold. Okay, and I think that potentially 1360 is in play. And if we can get above 1360, the next key level is around 1400. So we'll keep an eye on that. Let's take a look at silver. Silver's still struggling with some of these levels here. I think the analysis on silver is, the analysis on gold, I think you could apply that analysis to silver. I think the key level in silver is around $23, $23.05. $23 is a nice round number, so I'm going to pick, $23 I think is the, I think this level right here, 23, is probably going to be the key level that we could potentially push into. Okay, so don't really have a lot on that. Let's take a look at the 30-year bond. So the 30-year bond, I'm looking at this and wondering if we're going to get another push in bonds or not. I don't really know at this point in time. I mean, we do have a cup pattern forming here. This is a pretty nice basing pattern going back all the way from, the end of November, 2013. So the question in my mind is, are we going to do this? Here's possibly the handle, and then, break up above and come into some of these key levels around 140, 141. Okay, so what we'd really need to confirm that would be a break, break back up above, these levels up here, or a break of, let's say, 135, or 135 and 21/30 seconds. Basically a break up above this swing point here, looking to see if we can, do that kind of thing. If we can't, then, this market's just looking sideways to me, because all we've really done is establish this sort of box range. And until we get a break of this, this box, or this, you could consider this a cup pattern. But until we really get a break outside of this range, there's not really a lot to talk about in the bonds. Okay, let's take a look at the 10-year. 10-year, looks the same to me. You've got this sort of wide range. Now you've got this sort of cup pattern, right? So the question is, are you going to break up above that? If we do break up above that, I think some of the key levels to look at would be, probably 130-ish. Yeah, I would say 130 would probably be a key level to look at. That would coincide with a retest of these highs going back into May of 2013. So that's I'm just going to drop a level there. I think that's really that would really be, and it coincides with a fib level as well. Not a really important one, but so I'm going to mark this as resistance. Let's give it a little bit more prominence, make it a little bit thicker, and I think that's really the level that we'd be looking for if we could get a break, or if we could get like a cup and handle kind of breakout pattern. Let's take a look at the 10-year TNX.X on TradeStation, which is basically the yield on the 10-year. So, this interest rates still look, they still look lower. Even this pullback or this retracement higher really just put us into oversold territory on the slow stochastic. We're still below the zero line on the MACD. So it looks like they want to keep interest rates lower. The key level, I think, in the 10-year the 10-year yield is really 3%. If we can get above 3% here, or 30 on this chart, I think that's where we would start to see an inflection point in interest rates. So until and if that happens, I think interest rates are just going to remain lower. So, a move higher in bonds would bode well. Let's actually take a look at, let me jump over to some of the seasonality charts and just take a quick look at, what the 30-year looks like from a seasonal perspective. So around this time, it looks like we find, now this is only going back over the last 5 years, and you might want to check in with Don Vialou's site at, let me just write this down. This is John Vialou's site, this is Don's site, timingthemarket.ca, I believe it is. And then you might want to look into what the seasonal charts look like on John's site, which is, I believe, equityclock.com. Okay. So if you want to look at some of the seasonal tendencies there, those are really the guys for seasonality. You might want to double check with their charts. This analysis is just slightly different, but I use this sort of as a litmus test or as a starting point when I look at some seasonal stuff, because it's compatible with my platform, just to see what the seasonal tendencies might be. So if we look at where we are now, oops, apologize, I got to switch this tool. I need to clear this off, so just make a note of those websites there. Let me clear this off. And if we look at where we are, excuse me, where we are now, okay, these are weekly bars. This is roughly where we are now. That's not very clean, but that's roughly where we are now. So we've kind of come into a seasonal low point from a seasonal historical perspective, and we have the potential to move higher, right around where the time where we are at now, in terms of, we're coming into the end of February. So we have the potential to move higher into, by the looks of it, April, May, potentially into the end of May. So we'll look to see if this seasonal tendency plays out where bonds go higher and interest rates go lower. And I guess that's all really going to depend on what the Fed decides to do. So that was the 30-year. Let's take a look at the 10-year again. So the 10-year looks very similar, in terms of the seasonal historical view of this. It looks like, we could get a move higher in the bonds in the 10-year. And if we let's look at TNX.X, just for good measure, we're coming into a period here where we're coming into a potential seasonal high, and then we could be looking for a pullback in interest rates. So if this seasonal tendency plays out, that's sort of the bias that it is presenting. Okay, so let's wrap up this video. I think we covered all the major markets. I just want to jump back to some of the metals and see if they have a seasonal tendency at this time of the year. If we look at gold, let's see, gold here. Yeah, gold looks just sideways to slightly lower from a seasonal tendency perspective. So, it doesn't really change the analysis that we presented earlier. So just trying to think if there's any other markets we should cover. Let's just look at a market we've never really looked at before. One of the guys in the trading room brought this to my attention. So this is coffee. And if you look at coffee's had a really, really nice, it came out of a basing pattern, had a really nice move higher. I don't trade coffee, especially coffee futures. If I did, I'd probably look for an ETF that tracks it. But, this is a really strong market. And some of the other markets that I do look at, let's take a look at this is the corn market, right? Some of the grains, it looks like we've got a pretty decent low coming into play. And we've got a decent low coming into play. We've got a basing pattern. And it looks like corn is ready to bust a move higher, as well as, let's take a look at wheat. Wheat, I don't have the trend lines drawn on here. I do have my other charts. But wheat has broken a trend line here, and it looks like it's starting to edge higher. You can see it sort of flip the script on the 5 ATR 20, where now it's providing support. So any pullbacks essentially are, worth considering in terms of a move higher. Okay, let's take a look at soybeans. Soybeans came out of their basing pattern there. They put in sort of a complex bottom and then around this area, and now they look like they're breaking out of a pretty established range. They've got, they've got a little bit of overhead resistance here. If we can get through that, I think that soybeans might have the potential to move higher as well. Okay, and from a seasonal perspective, it looks like the soybeans have, they enter into a seasonal low period here, and they have the potential to move higher all the way into, let's see, July, August, all the way into the end of August. Or is that September? July, August, September. No, I guess that would be into the end of July. So this is kind of interesting. Going to keep my eye on these markets. I haven't traded them in a while, but I may look to find some suitable ETFs that are tradable based on these markets. So I think that's all I really have this week. I don't have any events coming up until next month. But we do have some exciting and interesting events that we've been working on that are educational in nature that I'll be posting out once the details have been solidified. I hope that helps. Stay tuned. I'll be announcing some interesting things coming up over the next few months. Good trading, good investing, and we'll look forward to seeing you at an upcoming meeting or at the next update. All the best.